All right, so we're starting this overnight little overnight activity show, little bonus. We're going to actually kind of review some of the setups today and just talk about the markets and maybe get some good setups for tomorrow, getting ready. But right now, the futures just opened up. It's about 6:15 in the evening, and it's the last day of November. We start off December. December's been a very bullish month. Um, throughout history. There's nothing here, and I'm really looking for a big pullback yet, but we will watch the market day by day. That's not the important part. The important part is just, I think what we were discussing today on the site and, some of the questions about, and I want to refer back to, I forget what his name was, new person I saw in the room. He said he just got joined and he had some questions and bought a yearly membership, which was nice. And then we just went over some of the basics that he's seen on the chart. He wanted to get on board. He wanted to download the right charts. He wanted to download, understand everything about it. He hit the floor running, hit the site running. So it was good. It was actually good to go why and explain why do we mark these down in real time. And it's important that we try to do that all the time. In some cases you might see it like maybe fall through it a little bit further. But what we do is we take a look at that big picture, and the big picture on this is really impressive. Because you might not be exact on every single setup, and there might be news out there that kind of pushes us through certain levels and kind of overextends the upside, and that's the nature of the market here, kind of feeling out levels. But the majority of the time when we go back here, there's always going to be an opportunity here. One of our alerts go off. And these alerts, are just a combination. The yellow ones and the blue ones. Each one has a, the blue one is the tradeometer. The yellow one is the Rambot. The purple one is this new kind of a dual setup I'm setting up for Twitter, and we actually had that set up yesterday, I think it was. So, each one of these identified throughout the day, and each one, basically at your fingertips. And I love putting in that real time because when we look look out, and we even look over here, and I'm actually going to move this over and take a look at the tradeometer. You're going to see mostly the ES1 right now. You see part of the NASDAQ, but I really just kind of scrolled back on the ES so you could pretty much see the overall alerts that went off today. And you could say, you love the first one. Actually, the second one was really great. It had a nice bounce off of this. And remember, these alerts are scalping alerts. This is by far, absolutely, no doubt about it. These signals are short-term signals. And they're supposed to be taken advantage of on that short time frame. So the criteria is excellent for the entries. Your alerts will come in. And this is what I stress, is that you have to have that same discipline and that same, criteria to take you out of a trade, be it with a profit or not a profit that you're expecting. And that's what kills you most of the time when the market teases you and makes you hold on, and then you pull back and then you're flat again, but you need to get that, oh, you know what? I had 2 ticks, but I wanted a full point. But now I'm back to zero. I better hold on to get my 2 ticks back. It never goes. Now it's down. Oh, well, now I can't sell because I'm taking a loss. I don't want to take a loss. I got to hold it. And that's the mindset of typical, or not a typical trader, but everyone seems to have goes through that phase once in their trading career. So it's important to recognize that. And I can tell you, no doubt about it, from 20 plus years that I've been trading, it hit me one day, and I think it was probably 2000, 2008, 9, 2007, maybe around 2007, 2006. That's when I started doing the show. Yeah, it hit me. I said, there's a right way and a wrong way. There's a straight line, or there's, you could try to reinvent the wheel. You could try to reinvent some, make some other things. And it becomes, you're going to get right sometimes. You're going to gamble and it's going to pay off. But a consistency is defined by this. And, and it's great to review and understand that if we could put our whole, I'm gonna have to go back over here. I'm not even looking at the right charts. I'm dealing with two streams now, but if we could, put ourselves into that box and say, this is the only thing I'm looking for. You know, most likely, if we could go back and look at the real true divergences here. Here's a nice one. And you know the divergences I look for. You know, they have a very strict criteria based off the 80 line and the 20 line and how the thing is. And then we even add candlesticks. But in this case, this was a nice divergence. And you could see a nice little pullback. And right to that point where we started pushing back up was that first rotation, fast rotation. So that 1 minute signal was great, but it's only going to last 1 minute before the thing starts moving back up. But just knowing that, you know, imagine 2 ticks was worth a point for you. Just to kind of just get in your mind that these are high probability setups, but they're probably not going to give you, because of short term and there's a lot of chop, unless you're looking at the bigger picture and the bigger time frames and you're going with it saying, all right, I'm going to take the short here. If it bounces back, I'm still going to hold it because my overall time frame is starting to rotate down. So you're going to deal with this. Simple, right? Simply thought about and talked about. But it's another thing applying that. But I tell you, if you could just get into that habit of taking what the market gives you, not expecting, you know, not being an entitled trader, you're entitled a point on every trade. So then we have, you know, our divergences, and we have that Rambot, and then we have our multiple time frames, and we have that tradeometer. So we're working these together, and then when we have the combination alert, we have those super alerts, and then, you know, and that's basically it right there. When you have that, just they're bringing you what we need right now, and that's what we're doing. Now we might not want to take that trade here, as you can see, it did get a little bounce and chop, and overall it failed here, you know. It did fail, and we did have a little momentum, and it did stop on a dime there and kind of got a little bounce. And this actually probably looking more of a bearish flag, as you had embedded slow and medium stochastics holding that 20 line. A little rotation here. You probably should have read it. You could have read into it if you were really focused on this. You probably could have read into this being a bearish flag because of our strategy here, when we could actually read the dual stochastics here and then look for that rotation. This one didn't really rotate all the way. It just showed weakness. But that's what you want. You know, you want to be able to pick up that thing. Again, you could this would be a chapter in the book, how to recognize a bearish flag. And we have a technique for that. So we have all these techniques. All we have to do is continue to practice them, you know. I always have so many great analogies, you know, being baseball or poker or fishing. And I think surfing was the last one I did, talking about catching your wave and knowing what to do with. But I just had another one on the tip of my tongue. I forgot what. Oh, Wing Chun, martial arts. Now Wing Chun is, you know, I always consider Wing Chun like the one of the best martial arts, and, you know, kind of the foundation art of Bruce Lee's Jeet Kune Do. And now that's, you know, again, if you're into martial arts, or at least, you know, followed it a little, these terms might be familiar. If it's not, don't worry about it. But there was a science behind the art of what Bruce Lee taught. It was a very logical system. It was about straight lines and levers and angles, and getting, you know, reaching the destination quicker than the person reaching you. So it's, and, you know, and it was a very clean and precise and exact science, and it worked. You know, it's what Conor McGregor does. He does Jeet Kune Do. You know, you can see with his hands and stuff when he's has that checking hand. He's very, you know, it's just, he doesn't even fall into a style, and that's exactly what Jeet Kune Do is, kind of a stylist thing. But anyway, this is a trading show. It's not a kung fu store show. But that's it. You know, it's you know, the divergences are giving you that opportunity. You're opening to strike. You might not get a lot, but it is enough. You know, most of the time it's going to give you enough. So, you know, we should have a list. You know, I thought about this today. I said, well, what are we going to talk about? I said, it would be great to have a list, you know, like a kind of a flow chart and just say, does this setup fall into any of these categories? If it does, take the trade, apply the stop, let it roll. If it doesn't, wait. And what would those trades be? What would those trades be? Well, if we would mark them off, it would definitely be excuse me, a verifiable or a Rambot. That could be a visual confirmation on a Rambot. I would like that 3 or 5 minute time frame trades. That would be a trading situation for me. And especially with the five minute kicker, meaning that we had the 5 minutes starting to turn in our favor. The tradeometer, if we look back at the tradeometer, and again, I just showed it to you before, it's just devastating. It's if we look back here, and I want to actually put this back over here for a second. That means I have to move both of these over. You'll see that even though it wasn't pinpointing all of the most of them have been. Like here, we had a nice little sell signal, kind of went sideways and eventually moved down. And what I'm saying is, you look at that bird's eye view, or that, here great short, here great long. It did roll over, but again, scalp would have had you out. Here, it moved down a little bit further, then reversed and went up higher. And what I was saying is, probably within 5 minutes of the signal, if you haven't started to turn, you probably will start to turn. So it's like, when you have a signal like that and it's chopping around, eventually it does make its rotation up. Here we had a signal, went sideways, eventually did make its rotation down. And here, back there, this was a little sloppy trade, and kind of a one that kind of drifted down and then kind of popped. It did get back up above that level. These signals do, but I said it was, and even on this type of day, it was very organized. The signals came in pretty clear. They were very sloppy just because of the way the market was going today. But even in the slop, you could look at that bird's eye view of that and see, it really does pinpoint the short-term moves. And it's just about now developing the confidence, the techniques to get in. So that's today's, little pep talk on the Rambot and on the tradeometer, working it together. I also put out a couple new alerts that are going on Twitter. I mentioned that during the show, but I'll mention it again on this video. One's going to be a 60-minute divergence, which we don't have on the Rambot, which I want to put on the Rambot. I just haven't gotten around to it. But this will compensate for that, because I want to put those in the bot channel also. So very good 60-minute divergence scan, and then I have a couple good ones. Something with a little secret sauce on it. And when that first hits, that was called the there was a rise in divergence indicator, I think. I have to look back at it. I'm not going to worry about it right now because I'm still testing a few of them, but you'll see those starting tomorrow. And I'm very excited to see that first alert and see how it reacted today. Actually, there was an alert today. It was right here, I believe. Oh, no, was it over here? It was 12:15. It was this nice alert over here. I think that was it. So many good alerts. All right. That was a nice grind higher, too. So back here, and again, this is a little bit after 8 o'clock. You see nothing's going on here right now, but during the day, you definitely saw some opportunities. And, when you see pivots, even though this pivot looks a little bit lower than the alert came in, overall, it's pretty nice. And then, after everything was said and done, Paul actually mentioned this channel that's outlined in blue. It's a nice pivot area there, pivot area there. We came down to it, nailed it once, twice, 3 times, 4 times. You start to hold a trend line like that, it starts to work better to the upside. So we'll extend this. We'll watch this overnight. But most likely, that's a pretty nice little channel. I'd probably get rid of this one right now and get rid of this one so it doesn't confuse us. We'll stick with this lower one. And you see the market's actually pushing a little bit higher right now. And even this line here, I'm going to get rid of that. Get rid of this. Clean this chart up a bit. Your stockbroker. The signals we're only going to come out on the tradeometer. Rambot, actually uses a lot of the cash values on that, so you're not going to get any signals after hours on the Rambot, which is fine, because that, really it's much better to trade, after volume comes into the market. This kind of grindy stuff actually doesn't work well. So we always talk about, the boundaries of trade. 3 o'clock in the morning, probably things start to pick up, and you could probably start relying on at least some of the tradeometer setups. But I really like it after 10 o'clock. I like to get through that early morning. Actually up to 9:30, but from between 9:30 and 10 o'clock, there's such a, there's such a chance of an explosive move up or down and reversals, and the momentum is there to actually push things beyond normal levels. And you like just the market to kind of settle and get into rhythm, and then you'll start to see that the tradeometer starts just to find that rhythm, and if on average you get, if I could say on average, I mean today we had see if I can drag this over here. Hey, we had, and this goes overnight too, and you can see that overnight it was just, I don't think that worked. But right when the market here started to get a little, we had that nice sell signal to start off. And then about, right before 10 o'clock, that 950 area, also an alert came out. And we could zoom in here too, I think. There's all kinds of cool things you could do with this. You could zoom in. And then, we failed, and we actually came down here, stutter step, got an alert, pulled back a little bit further, and then actually moved up quite a bit. And again, you could almost tell that, one of the things you'll find out, if you have an identifiable trend or a bias on the market, you want to try to take the trades that are in the favor of the overall market bias. So if we have this downward pressure, that might be showing up on the 60-minute time frame or the bigger time frames, even a daily, or you just feel like the market's kind of just lagging, you'll notice that the sell signals will be more exact than the buy signals, because that's just what's going on. And but then you can see everything kind of got into a rhythm. This was actually one of our tradeometer Rambot alerts here also. And then this one, another one here, kind of chopped down and broke down and popped back up. But other than that, then the market here closed, and then this is where we are right now. So no signals right now on this. And I don't really pay attention to it. I want to run it sometimes because I do believe, but if volume was in it, I would pay attention to it. And then remember, I don't even look at the other side as much. I just turned it over now, and it's take a look at the crude chart. So we have crude. That looks like it's a little messy there. The gold chart. I got to talk to Paul about this. These are acting weird. Hey, Sonny. Yeah, so we're just, that's what we have. So really a nice day. I'm looking forward to tomorrow. Like I said, today got in here, wanted to take better setups. I find myself mentally still, if I don't hit it perfectly, I tend to shy away from it because there's a little more pressure being live on the air. So I try to get those best setups, and I tend to hold off. But now we look back, and I know a lot of other people work together in the room. They're taking a lot of these trades, and, that's what I keep on saying. You got to keep on taking them. Everyone's going to put their own little twist on the method. I think it's a great method. I think you're going to look back and you're going to compare it to whatever you want to compare it to. Look at it. I mean, this is The proof is in where we just put our symbols real time. You know, the squares, circles, real time. Understanding why we're doing that, and even if it doesn't work out, usually figuring out, hey, we'll see the signals that this is a bearish flag. And if you get a nice signal and it does go sideways, then that's something you have to anticipate, and that's part of trading. You know, something, you know, normally you might have a signal, but if it doesn't play out, it doesn't mean that it's, you know, a wrong signal or a right signal. It's telling us to, hey, pay attention. This is something that typically works out, but you know, sometimes if it doesn't work out, it's a signal in itself, and we're not going to go down that road. But this was a nice bearish flag. We followed through, and then again, now we started getting into a rhythm. So, you know, tomorrow, if you're looking at times to do this, you know, as it gets past 3:30 in the morning, you know, I would concentrate on, look on it, but you know, make sure you have that divergence. I would still say between the tradometer and the you know, that Rambot. The Rambot is great because I think divergences work the best, but you have to, you know, you're going to get the alert, but I would always visually confirm it. The tradometer is something I don't have to confirm, and I usually would, you know, look at that as a great trading opportunity, you know, and almost take that, knowing that the market is not in a trending phase, you know, the type of you know, something that pushing the alerts to one side too aggressively. But even if that happens and you could recognize it, that's a big bonus, because all you have to do is now just buy the, you know, in a bullish trend, just buy the first pullback, the second pullback. All right. Professor Hetty, I like that name. He was in earlier today. And he's asking here, can you please show me which 4 indicators you use at the bottom window here? 1, 2, 3, 4. All of these are stochastics. All right. And not to go into a whole thing about stochastics, which I would do coming up. You know, and I'm going to make a couple big announcements before February's show. One thing is I want to do a couple big webinars online, you know, just webinars for everyone, and really break down, you know, some of the bigger topics, exactly what stochastics are, because, you know, people take it for granted. Oh, stochastics, all right, that's an oscillator, it measures this, but they don't. Could anybody really give you a good explanation or an example how it represents the movement in the chart? And it took me so long to kind of just get my fingers, or, you know, my hand grip or my mind gripped or wrapped around that whole concept, and then it started really showing up, and now it's something I search for because I believe in it so much. But it has to be the right setup. So if you go back and, you know, I'd say every time you know, get through with the day, you know, and you're going into some research, you're going out and going to your office or going to your computer, look back on the ES. And this is, again, this is more for futures and, you know, traders, but you could easily trade the SPY on these techniques. You know, it's a scalping tool, but it's a great scalping tool, because if we're not scalping, then we're pretty much, you know, longer term. I mean, it's a big difference between holding something overnight and scalping intraday. It's night and day. It really is. All right. Well, we'll do that, Sonny. All right, yes. So that's a good idea. Sunny wants to go in mom mode. She deserves it. Mom mode is members only mode, and we tend to, you know, kind of just go into an extended commercial for the outside if we're touching on kind of sensitive material, top secret information, which is not. But it's, you know, it definitely is. It's worth more than it's worth money. So I want to put this on a members only mode. There we go. All right, what are you looking at? So I know what you're looking at. So you downloaded the MedVed Trader, right? So what you're going to do is you're going to right click here and you're going to add let me double check. I'll make sure I'm not add indicator, right? All right. Now there's two different things. I think it's hidden here. It's like kind of a second. You can see it goes in alphabetical order here. A, B, C, D, E, F, G, H, I, J. It goes all the way down here to S, T, V, W, X. And you might think, hey, that's it. But then there's another one that starts underneath it. And if you go all the way down, you'll see fast. It starts with an F, fast stochastics, full stochastics. And if you go down to probably a little bit more, you'll probably see slow stochastics, slow stochastics. So that's where you're going to get those. That's where you're going to get those charts. Now the difference between the fast, the slow, the full. The fast is the original stochastics, which was developed by George Lane, and he, when they first came out with it, was the fast stochastic oscillator, and then over time they slowed it down by adding a moving average to it and the smoothing. So that would be the slow stochastic, and then you had a full stochastic, which gave you another variable that you could add yourself. But the ones we really pay attention to is either the fast or the slow. In this case, I've experimented so much with the full and the fast, slow, etc., etc., etc. I don't think there's a big difference. There is a difference, and I find that the fast is a quicker one. It doesn't have that smoothing average on it, which gives it a little bit more of a chop, a little bit more aggressive things. But this is the fastest one we're paying attention to. And 14, really, the percentage K here at 14 represents how many candles it's going back. It's a look back period. So it's going back 14 candles on the 1 minute time frame, and it's doing that average. It's calculating that, and it's applying a three moving average, a 3 period moving average to it, and it gives us that. But you don't see that. The green line is what you're seeing. You're seeing this is the smooth 14. So this is actually normally we get 2 lines for the stochastics, and this might be confusing for you. Because most people see 2 lines. I hide one of the lines because I find that having the 2 lines is confusing in itself, because there's a lot of crossovers and people tend to get distracted by the crossovers. So I don't put I put the smoothing line on the signal line. And depending on what your look back period is, that range is calculated. What your range is for the last 14 periods. And if you're trading at the high part of the range, up near the 100, the top, your stochastics going to be overbought. And if you're at the lower part of the range, you're going to be oversold. And again, we went over earlier today on the show talking about how momentum here shifts before price. So we start to see that momentum shift, that momentum on those, if you're up at the top of the candle and we're starting to rotate back down inside that range over the last 14 periods, and we're starting to rotate that back down. Prices at the highs, that's a divergence. We look for a rotation back with the price. Everything takes time to get to kind of get that concept and learn about it. And honestly, it did take a while to just really start to appreciate and gain confidence in it. Yeah, no problem. I knew that was going to be the problem, because it does start with either a F fast or a slow, or that was going to be the issue. And then again, I'm putting the signal line down so that you see each, and then we talk about the fast. I keep these numbers here: 14, 3, 44, 60, 10, 10. I could go into a story about this. It was. Before my daughter was, it was 7, 8 years ago. I started, about 8 years ago, 7, 8 years ago. Maybe 6, but I think it was a little bit more. I was working on, an indicator, kind of a, I've been working on the tradeometer for years, it seems like. I was looking for this ultimate signal here that represents different time frames. And so I was working with the different time frames and how the 40 period, the 14, and the 60 all work together. And, I have I was using the full on. I was using slow stochastics on a lot of them and the original testing and stuff. The what I found was that we actually have a great rotation when all of them get overbought or oversold at the exact same time. The market here shifts aggressively. So when we see these dots applied on the tradeometer, you're getting an idea where that's coming from. You're looking at multiple time frames, multiple stochastics, and they're all lining up. So you're getting these great setups that, over time we've, determined that we're going to see pivot areas at these levels. And when you look at them now, and you look back and you see how accurate it is, yeah, I was cocky. I was doing that, right? But, and it's great to have that. It's great to have that because, when we do see that, and then, that's just two indicators on its own. But when you have the combination, you have that divergence and a multiple time frame setup, or multiple, I call it the multiple time frame. That's really great. That's what we, that's the go-to trade. And then over time, this started to talk to me. Not to sound kind of crazy and stuff, but I started to see patterns play out over and over again, especially bearish flags and bullish flags. I noticed that one thing: the longer the stochastic, the longer the look back represented the longer-term trend. So basically, it was a longer time frame. So as we found that when I finally got to a sweet spot at that 60 period, we found that really represented the longer term trend. So when that held under that 20 line, we've been in an aggressive downward trend. The medium was working great for me, just kind of confirming that and just keeping that there as a medium feeler out. But it really came down to that 60 and that fast. But now we know that if we have a strong trend on either direction, we're embedded on the full. If we're embedded on the medium also, which is the middle one, even though it says fast, don't get confused. I say medium because 14 is the fastest, 40 is the medium, and 60 is the longest. Even though it says fast and fast, don't get confused there. I say medium here because it's the middle one. It's the middle speed. And this is the fast one. This one will rotate back and forth. The fastest will be the second, and this one will slowly take the third. But when they all come into orbit together, that's when you're going to get a super signal. But now we know that if we do have a continuation trend, and that tends to show up on that full stochastic as being embedded, and embedded means 3 or more candles of that time frame. In this case, we're just dealing with a 1 minute, but it stays down there. There's no real set thing, but you get a feel for it. Like, hey, we're not rotating back up. This is rotating back up. This one seems to be embedded. That tells us there's probably more downside coming. So then you start to say, all right, this one's pushing up. I want to be able to get short as this starts to rotate a little bit higher. But in this case, it didn't get that high. That means the market was a little weaker and it fell down. Normally, we'll get that nice sideways embedded rotation up to 80. And at 80 would be a little spike, and you'd see that flag just like this. The flag would actually look just like this. Not that. Hold on. Freaking trend lines. It would end up looking something like this. And your little pop-up here would represent that 80 mark. In this case, it was very weak. Very, very weak. It never even got a full rotation. It just dropped out of it. And again, then we got oversold, rotated back up, got overbought, rotated back down. We had a signal on the tradeometer, and a beautiful signal. And it probably was a, this looks like it was probably a tradeometer signal too, but I don't have that. I just messed it up because oh no, I didn't. What is that? What time is that? That's 15:15. Yes. Looks like that we had a tradeometer right after 3 o'clock. I think we had it. I can't really tell. It's just at the end of the bar there. Hold on. Oh, look at that. About 310. Yeah, so we did have a tradeometer. I didn't even mark it down for you guys. That's why it's important to have that. Right here, we did have a tradeometer signal also. So the tradeometer and the Rambot signal. I don't know what that Rambot was. Let me go back. What time was that? That was at 3:14 around. 3:14 was a 5-minute buy signal. So this qualifies as a super signal. A 5-minute or 3-minute Rambot and a tradeometer setup is within a couple minutes of each other. And that is great. That's what you have. I don't know how I missed that talking about it. I think I was taking a break at that time. But that's, and again, look at the size of that move and, for whatever. But we're identifying these great levels. It's just fantastic. What about the template for Medved? Do you need a template? I got the template here. If anybody needs it, I don't even know how to send it. But yeah, I could just give you my template. That's a great idea. I saved the lit layout. Let me see. Export, import, clear, settings, import, export, backup. User JK documents. To share with others with password. I don't know what I'm sharing with you guys. I think I could get it. I mean, yeah, that's one thing I should do on the site anyway. All right, well. Big shout out to Charlie out there. All right, so where are we at here? So, I was doing a little podcast too, and we kind of got a little carried away there. The futures here are open, pretty much flat on the session right now. What else do we want to talk about? You know what? I think we did a lot of good stuff on this. In case people missed it, I think it's a good talk on the stochastics. I'm going to talk more about, do a little research. But I'll lock this up right now and send this out.